Good evening, everyone. Very warm welcome. Thank you for joining us today. I am Shobit Goyal, Investment Lead at MICS International, and it's my pleasure today to moderate the today's session. We are here to discuss the important question which is on the minds of every NRI or every investor right now. Where should you invest your next dollar? Should you take the advantage of the attractive FCNR deposit rates available in the market? How should one approach the global investing? Or is it the right time to participate in India's long-term growth story? Over the next hour, we will explore all these opportunities, understand what's driving them, discuss their risk, and we'll try to put it together how into investment strategy. I'm delighted to be joined by an outstanding panel of speakers. First, we have Mr. Sheetal Soni. Sheetal is a chartered accountant and CFA with over 20 years of experience in corporate finance, treasury, debt advisory, and cross-border structuring. He will help us understand why FCNR will be the compelling opportunity for the NRIs and how to create the efficient frontier of wealth. Joining us from Mirae, we have Mr. Vaibhav Shah, business head at Mirae Asset India AMC. He's a CFA, he's a CA and CFP, over 20 years of experience across mutual funds, stock markets, financial services. He will help take us through the Gift City as an investment gateway, introduce Mirai's asset offerings, and how can NRIs and foreign investors can access the Indian markets through the US denominated structures. We are pleased to have Mr. Pankaj Upadhyay, founder of Star Asset Management Company. He will share his perspective on navigating today's markets and how should one approach the wealth. We will begin this session by Sheeta's presentation on FCNR, followed by the Weber session on Gift City, and then we will open the arena for the Q&A. So please feel free to post your question in the chat as we go along, and then we will have the closing note from Mr. Pankaj. So let's get started. Floor is to you, Sheetal. You're on you're on mute, Sheetal.
Yeah, thank you. Thank you, Shobit, for the kind introduction. If you can pull up the presentation, I'll start with the hottest topic of the town that we have been hearing for last maybe 2, 3 weeks, which is the FCNR opportunity that we have got. Uh, and in 10 minutes, I will cover what all you should be aware, as far as FCNR is concerned. What are the risks involved into this as well? What are the different offerings that we have seen so far? And the market is like a shifting sands. It's been evolving as we speak as well. I've been talking to a few bankers even before getting onto the call after a few minutes back, and they have been revising a lot of their offerings as we speak as well. So it's a bit of a shifting sense, and it will continue to be like this. And in addition to that, I'll also cover how you must approach investing as a subject, starting from top bottom approach and asset allocation basis. And then of course India opportunities will be covered by Mirae, Mr. Weber. So FCNR was, if you go to the next slide, Shobhit, uh, I'm sure a lot of you are aware of it. It is an opportunity only for NRIs. And you can make the deposits in US dollar, GBP, euro, and other major currencies, and your amount will be held in those foreign currency accounts only. And you have no INR risk. There is a predictable return that is being offered. It is offered as a tax-free exempt status for eligible NRIs, and it is fully repatriable. So your money does not get converted in rupees, no matter what. It remains in, say, for example, dollar if you make a dollar deposit, and after the term is over, which is 3, 4, 5 years, you get your money back in dollar back as well, and it is completely tax free. This is very basics about FCNR as an opportunity. If you go to the next slide, Shobit. uh, who is taking the currency risk, the rupee depreciation? I think RBI is taking that particular bit. This is the reason, that some banks are able to offer, attractive rates on unleveraged FCNR. So typically the rates used to be in the range of 4-5% dollar deposit rate, 3.5 to 4.5%. Now FCNR deposit, banks are able to take it in 6 to 7% range. Indian banks, the dollar deposit. And it was announced on 8th June. By 11th June, a lot of banks came up with the deposit rate, which is around 6% in many banks, SBI, HDFC, ICICI, Kotak, and they announced their FCNR deposit rate, which is 6% unleveraged basis. And this particular window is only available till 30th of September 2026. So we still have got a couple of months uh, before this opportunity lapses. RBI's motive we already know has been this whole this whole geopolitical issues which is leading to currency depreciation in India, and it is one of the initiative to maintain the reserves and the currency fluctuation as far as INR is concerned. If you go to the next slide, so I mean, compared to other options that are available, FCNR rates in the range of 6 to 7% without any leverage, right? So we get some fixed deposits, FD rates in some of the UAE banks, in Singaporean banks in the range of 3.5 to 4.5%. US Treasury rates are in the range of 4-ish%, but FCNR is being offered by Indian banks between 6 to 7% per annum rate. And once you leverage it, the rate potentially goes in the range of 9 to 14% because there is a spread you can potentially make on the leverage, because you get your dollar loan against the deposit that you make at a lower rate. And that's what making the leverage return quite attractive for NRIs who are investing in an FCNR. So on very broad basis, there are three types of accounts: NRE, NRO, FCNR. FCNR, the only difference between NRE and FCNR is that it is the amount remains in the foreign currency, right? So there is no currency risk as such. Interest is exempt on both NRE as well as FCNR for NRIs. Go to the next one. So how to make how this 6% is becoming say 11, 12, 14% is because of the leverage we discussed about. If you put $1 million, and on $1 million some banks will lend you say $900,000, $9 million, and then you end up depositing $10 million. So on $1 million you earn say 6%. On the $9 million that you get as a leverage, the borrowing cost is say 5.5 or 5. That's where you make that 1% or 0.5% spread on the leverage amount, and then your 6% becomes 9, 10, 11, 12% according to the offerings of different banks. I know there has been uh, lot of euphoria that it will be 14%, 15% or whatever, but so far I mean, we have not seen anything going up to 15, 16%. Initial days, initial first week, there were few offerings, but banks have been revising their lending rates on the leverage, and that is making the spreads little more tighter. That is leading to the returns that are being offered in the range of 10 to 12, 13% as what we have seen at this point of time. In the next slide, I'll present what banks are offering, what sort of a leverage. And again, uh, some banks are still struggling to offer anything on FCNR. They are still making their products. So this is something, and those banks who have came up, I will not name them, but they've also revised some of their lending rates, right, on their leveraged lending. So if you go to the next slide, what is being offered by various banks? It is the plain vanilla rate that you see on your left screen. HDFC mostly in the range of 6% that is being offered by various Indian banks. So HDFC, ICICI, SBI, Kotak, HSBC, RBL is in the range of 6-ish% that banks are offering in India. And with leverage, the rates are coming in the range of 9% to around 12, 12.5, 13% across different UAE banks, Indian banks, and we have tried to cover some Singaporean banks as well. likes of DBS. There is a trick here. Sometimes banks do calculate simple interest. So say for example, if you make $50,000 on your $100,000 in 5 years, the rate may appear say 10%, right? Simple interest basis, but the IRR basis, it may be around say 9%. So you have to be mindful of some of these tricks or simple, calculations that, marketing statements that some of these banks may offer. So in order to compare apples with apples with different banks and the offerings that are being offered by different banks. So we are expecting that certain more attractive rates will come into play. A lot of foreign banks will also see the opportunity and, may come up with their products, which are slow in, in offering their products. So far, they have not been able to come up. So keep an eye on various products that keeps on coming, and we will remain available for any clarifications that you may need in this particular aspect. So if you go to the next slide, Shobit, what you need to be aware before investing in FCNR is you need to be sure that you lock your borrowing costs. It should not be a floating rate vis-a-vis fixed rate. So you need to lock that rate. You need to respect the lock-in period because there's no early withdrawal provisions out there. So you need to lock in your money between 3 to 5 years. You need to understand that the collateral is your own money, right? When you leverage it, so that if anything goes wrong, if there is a default FI risk the bank is taking, if that FI risk anything goes wrong, your money is the equity which loses first before the lending bank or leveraging bank loses anything, right? Compare your, as we already discussed, compare apples with apples. If there is a simple interest that some bank is quoting in their marketing statements, try to compare it on a per year, per annum IRR basis, ex IRR basis, which is the right way of calculating it. Uh, uh, this is very important point. Borrow offshore where possible, because you might think, suppose if you borrow on $1 million, $9 million in UAE from a UAE bank, your DBR, your report with central bank will show that you have a borrowing of $9 million in your report. And if you do the same thing with a foreign bank, uh, it will not show up in the UAE central bank for that matter. So you have to be, if you do it from an offshore bank, you can manage your DBR and all other things that may impact uh, according to the rules and regulations of your particular country where you are residing. I know in this webinar we have people from all over the world. So try to borrow from an offshore bank rather than an onshore bank where you want your borrowing credit history and credit records lighter or cleaner. Uh, it is a tax-free from an India perspective. It You might get taxed according to your own tax residency. Suppose if you are a US resident or a UK resident, most countries charges taxes on residency basis. So you will be taxed according to your residency basis as well. However, Gulf investors need not worry. There's no taxes on, individuals when it comes to say UAE or Bahrain or so the Gulf investors. So we get it tax free in India. We have no personal income tax here as well in UAE. So that makes it a little more attractive for Gulf investors, GCC investors, NRIs. So this is all about FCNR. If you go to the next slide, which is to conclude our points on FCNR, that it keeps your amount in your foreign currency. Just repeating, there's no INR risk, which is depreciating, and there's a risk of depreciation. INR RBI is covering the swap issues. Yes, keep sending we have received lot of questions already. Keep writing those questions. We'll try to cover during towards the end of this session. Uh, Leverage can raise the return on your capital, but there is a risk also to this. Banks offerings are differing, and they are changing as well as we speak. Keep an eye on what is coming from various different banks, and always try to compare, understand the structure law suitability for you before investing. It locks the money, for for a serious period of time. So be mindful of that particular bit as well. So this is all about FCNR. I know this has been hot topic, so we thought that we will cover FCNR, whatever information that so far that we have got from the market. But I would like to take few more minutes before I pass it on to Vaibhav to cover how you should approach investing as a subject in general, right? And that's where, if you can go to the next slide, Shobit. Yeah. So I call it as a holistic approach to investing. And if you go to the next slide again, first and foremost is that you should not forget, in a holistic approach to investing, one should always look at three things, three flying birds, I say. Wealth, which is making most money on your money. The second is succession. Don't forget to plan succession. All the money that you save, work hard and all that for your kids and all. I think you need to plan it well. You need to be mindful of that. And then taxes, never forget the taxes. Tax becomes very complicated subject. People tend to maximize their money on their money, but they forget taxation, and then that eats a lot of the returns. So get through the structures which are tax efficient structures, succession efficient structures as well. So this is like a holistic approach that one should always keep in mind before investing. For people with lot of wealth, they should create, their trusts, foundations, and all that. For everyone should have, will at least in place, so that also keep in mind that, if you are investor in US capital markets, and there are estate taxes involved, so how to mitigate those particular taxes element also is something that you should be mindful of, and create a structures that kills the withholding taxes, personal taxes, estate taxes, all these birds as well within taxes. So this is one particular bit I wanted to highlight. The second, if you go to the next slide, we always tend to do in our life bottom up. We make money, we keep on investing in products which we keep on seeing, be it real estate, be it shares, securities, any other in our own business and all that. So if you go to the next slide, Shobit, try to look into what we call as 4D and 3D lens of asset allocation. So there are majorly four broad asset classes: equities, fixed income, commodities, and real estate. Within those asset classes, the markets always moves in cycles. So try to pick up the asset class, and then it bounces back again, right? So try to pick up the asset class which is running in a very difficult cycle, and then yeah, and then your view is that the cycle will turn around. So keep an eye on these asset classes, then also keep an eye on various geographies, various sectors, and across time horizons. So that's called 4D analysis of cycles. Last 2 years, India market has not performed well. I mean, but a lot of other parts of the world has really performed really well, right? I mean, US has been performing really well, Korea, Brazil, some of the countries have performed well. So if you keep an eye on a macro level, if you are a global investor, if you are an NRI, then you have the opportunity to invest globally. If you are an Indian resident, it's very difficult to invest globally. There are ways and means, but it becomes very difficult to invest. So if you have an opportunity as an NRI to look world as the market, look at world as the market across geographies, across sectors, or whatever. And then keep an eye on relative valuation apart from cycles, because valuations do matter. So at certain point of time, I mean, September 2024, India became overheated, right? The money in India is stuck in India, and then the valuations have tapered down since then. So you have to keep an eye, on valuations that are playing across sectors, across geographies, and across time horizon. So this is very key element, and whatever you feel is your allocation to say, for example, India, then Vaibhav and Pankaj will share with you a lot of opportunities, which is not only great opportunities in India, but also tax efficient opportunities, because that's very key while you invest, because tax eats up a lot of the returns as well, potentially. So if you go to the next slide, I'll just conclude my my discussion on this particular bit, that when you do the asset allocation, then you should be mindful of what shares or securities that you are taking, which is succession of efficient structured products, low fee also. This is also very important. And then keep on doing periodic rebalancing. Keep looking at your, not on a daily basis, that's a trader's bit, but at least 6 monthly or yearly basis, one should keep on looking at how the markets have changed. Just to conclude with 5 to 10 bullet points that I always mention before investing purpose, that always keep the investing very, very, very simple. But I call it as a KISS approach. Don't get excited. It is, keep it simple and stupid approach, because it is so important that not to get into too complicated products, because if you don't understand the risk of the products, don't get into that. Start with efficient asset allocation. Go to the next one, Shobhit. 4D, 3D analysis of market cycles. Then you should have a Babel personality. I know we keep on getting excited with a lot of opportunity that comes our way, whether it is whether it's the IPO of SpaceX or any other IPO that keeps coming. But your asset allocation should be right. You keep on taking bets, right, with 50% of the money, but 50% of the money you keep in safer products, which is largely on the asset allocation bit, right? When you will take the bet, you will realize over the period of time that most of the time bets doesn't work. I mean, the disciplined investing approach do work all the time. So most of the time. So core satellite approach, you keep on taking those bets as we discussed, but don't put all your money into one bet or one basket, or one great exciting opportunity that you see, right? You might be right, but if you go wrong, it's too risky as well. Survival is the key in the investing approach. Please don't burn out. Don't try too hard. Sometimes, not doing anything is also works well as far as investing is concerned. Always try to sell euphoria, buy distress, right? Most investors make wealth in the distress market, which comes quite a few times, only few times in our lifetime. It's a shrinking word, right? For NRIs, we have the world as the market. I mean, Indian investors also started to look into world as the market, and one should not ignore the relative valuations that exist across the world. Art of investing and science of investing is equally important. Word is always volatile. When Trump tweets, right, the share market, the equity market goes down, right? Take the opportunity. Then whenever the war again, the missiles again keeps on hitting, I mean, the equity markets goes down, right? The world is volatile even when Trump is not tweeting. It's just that he tweets and the emotions goes high, and then we get the entry opportunities. You have to see it from that perspective. Always try reading more history than the forecast, because all the answers to the forecast lies in the history. And the last point is, always evaluate a switch decision rather than a sell decision. Don't sell something and sit along. I have seen so many people, losing the greatest opportunities of in the market just by selling and thinking that they know the market and they understood the market. But the problem with the markets, as we are taught always in our CFA or MBA books, that markets are efficient and investors are rational. Both the things are not correct in real world. Markets are not efficient, investors are not rational as well. So always sell something and buy something else, right? You evaluate a switch decision. If I sell, say, US tech, if you think US tech is looking very expensive, buy something else, right? So if you frame your decision making in a switch manner, it will probably help you. Plan always succession and optimize the taxation. Play the tax game to your advantage. With this, I'll conclude my slides, and over to Vaibhavji I mean, these are some of our groups, which is where we discuss investing ideas, investing mistakes. We laugh on it, we learn from it. Join these groups if you, for just for the learning purpose. So with this, I leave the floor to Mr. Vaibhav to share opportunities, particularly apart from FCNR, what India has to offer, right? And what is the efficient way to invest in India for NRIs, also inbound India and also outbound India as well. Maybe it will be covered in this as well. So over to you, Vaibhavji.
Thank you, Sheetal, for this very interesting presentation that you made, and a good eye opener for me also on how to look at approach of investing. And I would say last couple of years have not been very kind to India. And like you rightly pointed out, NRIs in various parts of the world have investment products that they can create where India may or may not be part of the portfolio. And just like when India was looking like coming back on track, we have a beautiful product FCNR. So I'm sure an NRIs may be thinking, should we do FCNR? Should we do Indian equities, etc. So I have a small presentation to try and decipher two, three things. One is also introduced what is Gift City. I'm sure a lot of people would want to know a little bit more about Gift City. And second is why Indian equities makes a lot of sense at this moment. So I'll try and share some of this in a small presentation on this part. So give me 1 second. Hopefully a presentation is visible to all of you. So I'm sure a lot of NRIs must be investing, or most of you must be investing into India, and you have access to various products. So most of you must be investing in domestic mutual funds in India through the INR route, or you could be investing in a DIFC or a VCC structured Singapore product, or ETFs which are there, or even usage structures which are there. Now, what makes Gift City unique in this aspect, and how it is very friendly for investors? So the name itself is very interesting, gift. And so I start with my first slide with a slightly bold statement saying that gift is actually a gift for resident investors and a gift for non-residents. And I'll try and cover why it's a gift for both, or a boon for both type of segments, which is residents and non-residents. But before going to this, let me try and explain Gift City. So the full form of GIFT is Gujarat International Finance Tech City. So it is India's only approved IFSC. So some of you I know are based in Dubai. So in Dubai, if I can give you a parlance, that you have DIFC, you have ADGM, you have two jurisdictions along with ESCA, which is a third regulator in the zone. But like DIFC and ADGM get a lot of benefits for investments flowing through the region, Gift City is India's answer to DIFC in simple words. So what was the rationale of launching Gift City? So if you see foreign money which used to come into India, used to come from foreign jurisdictions. So we had a lot of funds structured in either Mauritius, in Luxembourg, in Cayman Islands, in Dubai, Singapore, etc. Now, at a point, the Indian government thought that why should India's money be managed by structures outside India? And why should India's talent and some of the best fund managers be based outside India to manage India money? Now, a lot of global managers manage India money sitting from US or Mauritius. And, if you don't meet underlying companies regularly, how can you manage a fund very effectively? So the idea was, can we create our own pool of very smart investment professionals within India, create jobs within India, and create a jurisdiction which can compete with the likes that I mentioned. And with that thought, they started with a zone called as Gift City, which gives a lot of tax incentives, a lot of easy way to invest into India and get access to India. Now in India, we always get these challenges that there are four regulators in India: RBI, SEBI, IRDA, and PFRDA. PFRDA looking at pension, IRDA looking at insurance, SEBI looking at capital markets, including broking, asset management companies, etc., and RBI looking at banks. Sad part about India, and please don't get me wrong when I say here, is that one regulator doesn't talk to the other. So bank KYC doesn't work for mutual fund, a mutual fund KYC doesn't work for insurance, and an insurance KYC doesn't work for pension, and pension KYC works nowhere. So take it as a joke, but idea was to tell that for an NRI sitting outside India, documentation is cumbersome. All regulators thinking in different directions is difficult. So when they started this zone, the idea was very clear that there should be one unified regulator. And the unified regulator is called as IFSCA. IFSCA has professionals mainly from SEBI, but it's a zone which is a one-stop solution to make your investments easy through this zone. That doesn't mean banks which are there in GIFT City are not regulated by RBI. If they are a branch or a subsidiary of the India entity, yes, RBI will continue to have oversight, but also IFSC will have the main oversight being the regulator in that zone. Second is the large challenge some of the NRIs face when they invest into India is currency. And Sir rightly pointed out a product FCNR. The reason the interest in that product is high because you don't take a view on the currency and you get fixed sort of return. In the GIFT City, when they wanted to start this zone, they've permitted 15 currencies to be traded in and invested in. Almost most of the large currencies are allowed to be traded in. One currency not allowed in the GIFT City is actually the Indian rupee. That doesn't mean if you go to a shop or a canteen or any other place, Indian rupee will not be allowed. But when it comes to business and trade, everything has to be in foreign currency terms. And all investment products will also be in foreign currency terms. Third, and the most important way to get capital into India is to create a tax regime which is competitive with the world and a consistent tax regime. In India, we've seen time and again taxation change, and it becomes very, very difficult for investors to take care of compliances when it comes to taxation in India. Most of you are living outside India. Why will you take a PAN card? Why will you do tax filing in India? All these are practical challenges. And if you wanted to make a jurisdiction which can compete with the likes of Luxembourg or UCITS or Singapore and attract not only NRIs but even foreign nationals, you have to make sure that your taxation and regime is very investor friendly. So what the regulations have done is first, for any businesses set up in GIFT City, there is a 20-year tax holiday in a period of 25 years. I don't think so. There is a single business in India which has a tax clarity as clear as what will be the taxation for the next 20-25 years. In fact, even after 25 years, the tax rate has been predefined and fixed. So I don't think so there is a single business which has that sort of advantage. Second, from a FEMA perspective, GIFT City is not considered a part of India. But from a taxation, it is considered a part of India. So because it's not considered a part of India as per FEMA, it's considered a jurisdiction outside in India. GST, which is one of the costs which investors bear when they invest in mutual funds or distributors and others pay. GST is not an applicable tax in GIFT City. So that's again some advantage which is there. So a globally benchmark tax regime. Now, earlier in the world, when you look at investments, a lot of deals, a lot of transactions were happening from jurisdictions like Mauritius and all. Some of these structures always have iota of doubt on what will be the double taxation or what will be the tax treaty. Will the tax treaty be negotiated, etc. But when it comes to GIFT City, I think so that's where clarity is completely there because it's a zone in India which the government wants to promote, and hence taxation is very, 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 very clear when they want to launch it. And what type of entities are allowed? Authorized FMEs are allowed who can do early stage investments, venture capital investments, family investment funds, registered FME, non-retail who can do PMS, AIF, etc., and registered FME retail who can do ETFs, mutual funds, REITs, InvITs, etc. So a lot of flexibility is given on the type of license you can take in GIFT City to launch products. And sitting in the GIFT City, you can launch products where underlyings could be either Indian securities, could be foreign securities, but the most interesting one will be securities listed in IFSC. If all of you know, there was a product called as Singapore Nifty to know where markets will open the next day. If you had to judge where markets will go, we used to always look at the Singapore Nifty. The Singapore Nifty has been migrated from Singapore to GIFT. Now it is called GIFT Nifty. Slowly, a lot of securities, whether it's bond and few equity instruments, will also get listed in the IFSC and in GIFT City. Both NSE, BSE, and even the bullion exchanges are there in the GIFT City. And the taxation of securities bought in the IFSC will be tax-free. That's clearly a big advantage given for securities listed there. And also it makes life easy because as an asset manager, we can invest in any part of the world through a well-regulated mutual fund sort of structure with an independent trustee, independent board, and an independent fund management entity. So that's a little bit about GIFT City. Now, when it comes to investing in India, large challenge when it comes to investing in India is where to invest. Whether it should be large cap, whether it's mid cap, whether it's small cap, or what theme to invest. So what we did is I come to Dubai almost every month. Unfortunately, for the last 2 months, I have not come. Hope to come end of this month or start of next month again and start my monthly trips to Dubai. Though I know it's quite hot there, but would definitely want to come back to the region again. And I used to meet a lot of investors. They said, we want a product which can dynamically change allocation between market caps and themes. And they need not worry on taxation. They need not worry on rebalancing. They don't need to worry on valuations. Which segment looks more attractive? Considering that feedback from partners, we launched a product called as Mirae India Allocation Fund. The idea of the product was market caps will have about 80 to 100% allocation, which is either large, mid, or small, and thematics will have 0 to 20% allocation. Now, the large, mid, and small, we've also defined the minimum maximum range of what would be the allocation to large cap, mid cap, and small cap. Now, when it comes to large, mid, and small, it is not investment directly in stocks, but in underlying funds. So investments in a large cap fund, a mid cap fund, or small cap fund. Now, the question that could arise in your mind is why not stocks? And why do a feeder structure investing in funds? As per the tax laws in India, a GIFT City's feeder structure feeding into a non-Indian equity instrument, which includes funds, ETFs, etc., becomes a pass-through vehicle and it pays no tax on buying and selling the security. If we were to directly buy stocks, then we have to take an FPI license. And while taking an FPI license, whenever we buy and sell stocks, we end up paying 12.5% long-term tax and 20% short-term tax. So if most of you are buying either a UCIT product or any other FPI foreign product, including likes of Goldman, Kotak, etc., or even Mirae UCIT fund that is there, in the NAV, the adjustment of 12.5 and 20% tax is already done. That impacts your return to a large extent. Here, the feeder structure into multiple funds makes it far tax efficient. A lot of Dubai investors know that when they invest in domestic mutual funds, they can take a TRC, they can do tax filing, and take a tax advantage while making the investments. But when they come through GIFT City, they don't need to worry about TRC, they don't need to worry about tax filing, because this being a CAT 3 AIF, taxation is at fund level and not at the investor level. And at the fund level, a fund which is buying and selling non-equity instruments, which includes funds and ETFs, is considered to be paying zero tax. And hence, it's a very beautiful way to access India and look at allocation. One thought could be that why not invest in a flexi cap fund? When you invest even in a flexi cap fund or directly in a large cap fund or a mid cap fund, you still take a view on one scheme or one segment of the market. Here you are taking a call on multiple things, and the underlying scheme for large, mid, and small can change. And I can showcase that. So, like we had a passive small cap scheme when we started, that we converted to an active scheme. So, dynamically, we try and see which category of fund can give a better return. Idea is to generate 2-3% returns higher than the index, which is Nifty 500, over a fairly long period of time. Now, how does the allocation work? Allocation looks at two elements. One is looks at valuation and momentum factors. Just one second. Valuation, sorry, we have got two filters, valuation and momentum. So valuation looks at a 12-month forward P, compares that with the 5-year historical P of all the three buckets, large, mid, and small. And it helps define how much to allocate to large, mid, and small. Currently, I might tell you that the Indian three market segments are very interesting. The large cap index is trading almost at more than 15% lower value than the previous high. The mid cap index is almost at all-time high, is already at all-time high. And the small cap index has done much better than even the large cap index. So actually what happens is the large, mid, small buckets keep changing based on earnings growth. This model keeps changing the allocation. But to ensure that only valuation is not taken care of, when momentum is also considered, we look at 3-month, 12-month risk-adjusted momentum score to also define the allocation. And thematic, again, is a more qualitative call, along with looking at valuation and momentum factors. So idea is valuation, NSE 500 earnings, tracking, can we deliver 3% alpha? What is the choice of underlying funds that we should invest? And what would be the allocation to thematics? So this being the overall approach that we've been looking at, if you can see that as the valuations of mid and small cap had become more attractive, we had started to reduce our allocation to large cap. So in fact, the allocation to large cap is down almost more than 10-12% in the last year or so. And the allocation to mid cap has gone up little bit, about 3-4%, but the allocation to small cap has gone up quite meaningfully. From almost 8% allocation, we've increased to almost 20% allocation. We have some allocation to manufacturing and consumer sector to diversify the portfolio, and these are two sectors where we believe significant upside is also possible. So we dynamically keep changing the model. Like I said, we moved out of a small quality product and moved to a small cap fund. The allocation for almost 6% is up now to 20%. Mid and small cap allocation since April, we moved from 32% to almost 45%. And if you can see, that's where the mid cap and small cap allocation has generated far better return than the Nifty 50 or the Nifty 500. So it's sort of quite dynamically created model. Overall, the idea of this product is being a CAD3 AIF open-ended product, give you the best ideas in India and give you the investment. Now let me come to a few of the challenges which most investors have when they access India. First is, like I covered, KYC and documentation. So in GIFT City, PAN card is not a mandatory document. If investors have a PAN card, they can give their PAN number. If they have no PAN card, they can give no PAN declaration. We have a completely online digital journey. And from the time we started, we've created an online digital journey to invest. So that makes the job easy. I know a lot of NRIs don't get OTP on their SMS, on their international numbers. and hence our digital online journey is completely through emails. And only investor has to e-sign. Taxation and ease of tax filing. So this product has zero taxation in India, and being a Cat 3 AIF, there is no tax the investor has to pay in India. There is no need for tax filing in India, no need for disclosure in the income tax, and no need, like I said, for PAN and other reportings, or even giving a TRC. So life is much simpler through this mode of investing in the GIFT City structure. Ease of remittance and repatriation. Money can come from any offshore bank in any part of the world, could be ADCB, ENPD, FAB, BBK, or any other bank, or DBS bank, and will go back to that same bank account. And investors will, there is no question on the repatriation, as NRE, NRO funds are not required. And currency, investors have the flexibility of investing in the dollar terms and taking money back in the dollar terms. What makes our product unique? We were the first ones to launch this product almost 2 years back. It's a completely tax efficient product, gives you flexibility of investing across market caps and themes in a dynamic manner. Our funds are registered with the local regulator, ESCA, with MAS. We take the flexibility of investing in tranches. One of the beautiful ways we believe investing in India is because Indian markets is volatile. We keep saying that SIP is one of the best ways to invest in India. We are only the only fund house which has the flexibility of investing in tranches and not in a single installment. So you can do 6 tranches or 12 tranches, and flexibility on share classes to invest. So it gives you a beautiful play on India. Now quickly on why India, and maybe I'll just share a couple of slides on to highlight why India makes sense. In the last couple of years, Indian market would have seen a significant reduction in overall valuation. Look at the demographics of India. And in spite of markets and unvolatility, just one second. Is the slide presentation visible now?
Yeah, Vaibhavji, visible.
Yeah. So I know that when it comes to India, India has never been a market which is very cheap for long periods of time, because the growth opportunity in India remains very large. Country continues to grow at 6-7%, is expected to grow at 6-7% for the next decade or so. And there's a beautiful saying from Warren Buffett which says, uncertainty actually is the friend of the buyer for long-term values. And it's a time that Indian market is shown for the last 2 years a lot of uncertainty, and investors, some of them have been impacted because of their patience. What drew this was, like rightly pointed out, high valuations in 2024. There was an earnings fatigue, a slowdown, which was clearly visible. AI, the world moved towards allocation to Korea, Taiwan, many parts of the world where AI trade was there. Many of those markets are up 5%, 6%, 8%. 5, 6, or 8 times. Many of the stocks are up that many times. In this period, Indian market has not done that well. There was uncertainty on trade tariffs, uncertainty because of the West Asia crisis, FI outflows, and little bit fear now of monsoon. However, if you are in Mumbai now, you will see for the last 10 days, it's just raining non-stop. I don't know where the El Nino is. In fact, in the last 1 week of July, in Mumbai has got 80% of the rain it should get in the month of July. Now look at some of the uncertainties which were there. Big uncertainty for India was oil. From almost a peak of $100, $110, we are back to $70, $75. which of oil remains below about $80 to the barrel. It's a advantage India. Either trade deal, we are more or less done with both large trade deals with Europe as well as with US, and in the final stages, and it's going to be very positive for many sectors in this aspect. India had seen a lot of FI outflow. With FIs moving out from some of the AI trades, we've started seeing incrementally FIs becoming now more positive on India. Valuations, which were a large challenge for India, now look far more attractive. In fact, after almost about 6 quarters of less than double-digit earnings growth, in spite of all this news flow, we're looking at about 12-14% earnings growth for the Nifty 100 and about 16-18% earnings growth for the mid and the small cap index. Market on a 2-year forward basis is trading at almost 17 times earnings compared to long-term averages, quite attractive. Sir mentioned beautifully an FCNR product where you can make dollar double-digit returns. I think so. With a 3-5 year perspective, if an investor can take leverage and invest to generate dollar returns of double digits, I wouldn't be surprised if the Indian market can give this sort of returns without any leverage. See, leverage works two ways. Here, without leverage, I think so. This market at this point, at these valuations, give you the comfort of double-digit returns. And I know there are a lot of slides. I don't want to go into too much detail, but clearly, market valuations look far more compelling now than in the last 2-3 years. And as most of the economic parameters, if you were to look even now, inflation is quite muted, GDP growth is quite robust, current account and fiscal deficit will not be as big as challenge as we thought. External debt to GDP, we are one of the best ones globally in this space. Our forex reserves continue to be strong. Bank balance sheets and NPAs are significantly low. So you are in a phase where most of the domestic macros in India are very robust. In the past, during 91, during COVID, during GFC, or during the taper tantrum, most times the demographics of India was always strong, but the economic parameters had become weak. And when you look at the parameters and then you look at where we have moved in the last many years, I don't think so India has had it this well compared to any time in the past. So the macros are strong, the demographics in India continue to be strong, and overall earnings and valuations, we believe, are quite robust. So if you see earnings growth of 15% for Nifty 50, mid-cap earnings of more than 18%, I think so the valuations look very, very attractive for investors to look at India. So maybe these were few slides I wanted to show about India. Also GIFT City, and I may just take another couple of minutes here, gives investors the flexibility of not only investing in India, but investing outside India. Because if India wanted to create a jurisdiction which can compete with the likes of DIFC, Luxembourg, etc., we needed a jurisdiction where two-way flow of capital can be allowed, and which ensured that now in GIFT City a lot of funds are getting launched where it allows investors to invest into global markets. We've got a global allocation fund, which is about $120 million, one of the largest funds which is there. A similar version we've launched called as a Global Advantage Fund, which is only for NRIs and foreign nationals. It lets you give the flexibility of investing 30 to 50% in countries which is developed markets and emerging markets, and 50% to themes. And when you look at themes, they include themes in infrastructure, defense, rare earth, semiconductor, electrification, AI, and data centers and digital infra. And you can just search Mirae Asset on this aspect. Mirae Asset globally manages about $1 trillion of AUM. Globally, we are known as one of the most innovative product providers when it comes to thematic products. An idea of launching a global product also through GIFT City was that NRIs and foreign nationals can get to invest in global markets again with zero taxation in an open-ended product with a pedigreed asset manager deciding on active allocation between themes and countries so that investors need not worry when to allocate to Korea, when to allocate to Japan, US, etc. So that's the approach that you can invest also through the GIFT City route. So GIFT City is now giving both options to access India and to access investing in global markets in a completely dynamic manner. These were some points I thought to highlight in today's discussion, but happy to take any questions you would have to understand GIFT City or anything else that you would like to know from our side. We also have, I must add, a team in Dubai and Singapore, etc. We are taking in Dubai a DIFC AMC license, and hopefully this month we should have the AMC license in Dubai as well. So a lot of ways, our present Mirae is present in 17 countries in the world and manages $1 trillion of AUM. And we would be happy to, create differentiated products for our investors and partners. So thank you. This is it from my side. Happy to take any questions. I think there are a lot of questions in the chat. Maybe if
Yes.
Shobit, you can help us with.
Yes. Thank you, Sheetal and Vaibhav, for sharing your insights in detail on these topics. I believe Sheetal has already replied to many questions on FCNR already, but for the benefit of others, I think if I summarize the questions, they are mainly related to the premature withdrawal and what if when the NRI come back to India, would effect it would have on their FCNR deposits, both principal and interest. So if Sheetal could, explain here just for the benefit of others.
So if I am an NRI today, invest into FCNR, right, and it's a 5-year lock-in, and then after 3 years I decide to move to India, right? That's the FCNR may continue because there has been a RBI guideline which clarifies that FCNR may continue, but Indian tax law works in its own way. And the Indian tax law says that the moment you are a resident of India, your income will be taxed, right? So any interest income that arises out of this post your status change will be taxable. So that's how the taxation would work as far as the FCNR is concerned. The exempt status is only for NRIs. They need to be an NRI throughout the period. Then only they get the exempt status throughout the period. I hope it answers.
Okay. The next question is to Mr. Vaibhav. Dr. Nilesh wants to ask the clarify whether it will be treated as MF or equity in USA, the Mirae said product.
Yeah. So, sir, we are what we are doing. We are registering this product with US authorities, and we hope to get the approval next month. In which case, we will be able to issue K1 certificate to investors who invest in this product. So it will become very easy for US-based investors to also invest in this product. By nature, this is a CAT 3 AIF. And in the case of a CAT 3 AIF, the way tax laws work in India, tax liability is on the fund. So the fund, the way it is structured, doesn't have a tax liability. So it's constructed as an AIF. But like I said, we will be issuing K1 certificate.
Thank you. The next question is, as an NRI, if I had to invest in any form of real estate in GIFT City using foreign currency, is it possible?
So I'm not sure even residents are able to get a place in GIFT City because that hot demand is there for GIFT City. In fact, couple of years back, the regulator, Gujarat is a dry state. I'm a Gujarati. I can tell you, they just announced that alcohol is going to be allowed in GIFT City. And after that, GIFT City prices just went off the roof. So now people want to do marriages also in GIFT City. In fact, there was a joke going around. People said that, can we call our cooperative society as GIFT City and get the benefit? So the demand for real estate, residential properties, commercial properties is very, very large in GIFT City. And demand is fairly large. In fact, I'll tell you my honest thing. We had an office in GIFT City. It took us more than a year to find a decent office in GIFT City. So I'm not sure you'll get easily real estate in GIFT City. Though by regulations, I need to check whether you can buy or no, but overall the demand for real estate is very high.
Okay, thank you, Weber. Few questions we got when asking for the registration. So I would like to ask some questions from those set of questions as well. So the question to Sheetal is, what are the best global investing options for retail Indian investors and NRIs?
So as far as global investing is concerned for NRIs, for NRIs, the world is open for you, right? I mean, you can invest into ETFs, you can invest. There are a lot of products available globally. You can invest into mutual funds. A lot of private banks offer a variety of products to invest in a global level. My personal thesis about this is that you should, as I mentioned to you about, you should go, even if you buy a few ETFs, you do better than many other investors. 95% of the investors not going through stock picking, any exercise on that front, right? So that works really well when it comes to global investing for NRIs. For Indian investors, the problem is, India has restrictions. Only three routes are available. If it's a tax-paid money, the irony is that if it's a tax-paid money, there are restrictions, right? There are a lot of restrictions. One is LRS, $250,000, for a resident Indian per year, and $1 million per person if it's an NRI, which we can take out of India. The second is ODI route. If you are in a business, you can invest through ODI through a subsidiary. If Tata wants to buy a Land Rover Jaguar, huge money can be taken out of India to buy, such companies, which is four times of their net worth of their capital. And the third bit is the OPI route, overseas portfolio investors route. A listed company in India can invest 50% of its net worth, in global capital markets. And if it is an unlisted company, private limited or something, then you'll have to go to Mirae Gift City Fund in order to find a way to invest into one of their fund, which gives an asset allocation to global equities or whatever. So these are the ways to invest and diversify your portfolio for a resident Indian on a global basis. I hope that answers.
It is. So next question is to Weber. So what is the outlook for Indian equities, FIIs, mid, small caps, and precious metals?
Yeah, overall, say, I'll tell you, outlook for Indian equities remains very strong. I told you that, see, in India, the only thing that led to a lull of about 18, 20 months of no return was maybe we ran up too fast, too quick. So markets had rallied too much. And then a lot of concerns, right, from trade tariffs, currency, oil prices, uncertainty on trade, um, all bunched up together. Honestly, in long term, markets are only slave of one thing, which is earnings. So if your earnings growth remains strong, markets in the long term will always reward investors. In the last couple of years, or about 6 quarters, we saw the earnings growth was about 7-8% in dollar terms. And when your earnings growth is just about 7-8% in rupee terms, sorry. And when you look at the dollar rupee movement, you would always think a 2-3% depreciation is a given for the Indian currency. So investors were not looking at a very attractive return, and hence a lot of FIs sold some of their holding. As I showed you, the earnings growth expected from India, in spite of all this, is looking quite robust in mid-teens. It means outlook for the market looks positive. See, if you see fairly long periods of time, Indian market has generated about 14-15% returns in local currency. Reason being, earnings growth in India over long periods, whether it's 20 years, 10 years, 40 years, and all have been north of 14-15%. The nominal GDP of India, which is GDP plus inflation, has been always been somewhere around 12-13%. Well-managed funds, companies have been able to deliver 2-3% alpha on that, and well-managed funds have been able to give 2-3% higher return on that. I think so. We are in that stage that markets look attractive. In fact, large caps at this moment are looking very attractive at this moment. They've been beaten out of shape. Mid and small cap, are structural changes happening in India, where if you see India, because of the sheer demographics of India, average age of 28 years, India will have 60% of the world's labor force. Hence, the consumer demand in India is going to be super strong. And a lot of listings that you are seeing in recent few years are happening in consumer-oriented businesses. Could be consumer, could be tech, could be new age businesses, but mainly in the space of consumer-facing businesses. And those are coming in the mid and the small cap space. So currently the valuations for large cap, very attractive. Mid and small cap, structurally, because of the sheer size of the economy. Some of the companies in India listed, whether it's, the largest, manufacturer of cars like Maruti, actually has more market cap in India than it has globally, or Hyundai has more market cap in India than it has in Korea, or Domino's, has more market cap in India than in US. So in many countries in the world, when you look at the size of the opportunity, India's size of opportunity is large. Average bulging consumer population, war and crisis doesn't stop that. It can create investor behavior of panic and fear and greed, but cannot change the demographics. And hence, I believe structurally we are in that place at a well-positioned portfolio, playing on large, mid, small, will always be able to deliver significantly double-digit dollar term returns going forward from here. About investors will not be, unhappy with double-digit returns with a 3-5 year perspective.
Thanks, Weber, for the answer. And I guess many people are asking about the minimum ticket size for FCNR deposit and how many times leveraging is available. Sheetal, if you can answer this.
Yeah, some banks, I think there's a problem these days with the banks is that they have limited limits also at the same time, limited bandwidth to deal with the amount of, applications that are coming their way, for which they have to open the accounts and all that. So that's a problem. I think $100,000 you can start with. That's what I have seen. So, or even less maybe. But I think people are willing to put big money as well, which is not which banks are struggling with the limits.
Great. So
We
I
just
guess,
add one thing, Shobit, here is a lot of people have concerns on investing in India. What will happen to currency? If you guys do a lot of FCNR deposit, make sure that the currency is not going to depreciate much. So one big concern all of you had about what will happen with currency. I think we will see that the currency will stabilize at current levels, or maybe in this broad range. And that's again a positive for investing in equities in India because of the FCNR route.
So yeah, so I guess I will take the last question. I'll combine 2-3 questions. Some people are asking about how safe are investor funds in Gift City and how does it compare after tax, fees, FX, and repatriation? And someone is asking, can you help in starting Gift City investment?
Sure. So starting Gift City investment will be Shobit, you can take that forward. But when it comes to safe, now you want to have a jurisdiction which competes with the like of DIFC or a Singapore or Mauritius, Luxembourg. You can't have a jurisdiction where regulations are loose. So it's a very strong regulated group, I like mentioned at the start, a super unified regulator, IFSA, which has got power equal to the four entire government machinery. If you see GIFT City is a pet project of the current PM, a lot of incentive he had provided to GIFT City when he was a CM of the state. So GIFT City is a huge project with a lot of government focus. Regulatory wise, from a perspective, I don't think so you need to worry at all on that aspect. A large part of the team are ex-SEBI officials, so from that point, you can definitely get comfort. In fact, GIFT City is signed with all of the large jurisdiction as part of the MOU with some of the countries on that aspect. So it's clearly a jurisdiction which is picking up and getting well accepted. In fact, I've been coming to Dubai and Singapore and other parts of the world to promote GIFT City. Initially, couple of years, I had to explain GIFT City. Now everyone knows GIFT City. In fact, some of the FCNR deposits you will do will be with GIFT City banks. So GIFT City is now a proven jurisdiction. Investors need not worry on that aspect. Second, sorry, your question was,
Can you help in starting GIFT City investment?
that you maybe you can be the right person.
I think there was one part of the question which is the tax efficient way of investing. I think
Yeah.
GIFT City offers that as well. So that is a good
Yeah.
part. When it comes to investing, India inbound investing, it gives if you invest in through a GIFT City fund in any of the India mutual fund, whether your country of residency has any treaty with India or not, it will not matter. There's no tax at a GIFT City fund level, and of course, Indian mutual funds have pass-through status as well. So effectively, it gives a very tax-efficient way of getting into Indian markets. And when you have multi-asset allocation funds like Weber has shared one of their product, I think that also helps, in so that you don't have to sell anything. Most countries charges you taxes if you sell something. If you keep rebalancing, you don't get taxed anyway, right? So that's a good part. And then that way you can play very tax efficiently through Gift City Fund.
Yeah, absolutely. I just wanted to add to Sheetal that the easiest way to attract NRIs and foreign nationals into India was to create a very tax-friendly environment. Like I said, PAN card not a mandatory document, no need for tax filing. So a lot of cumbersome compliances which NRIs have to face have been made easier in the GIFT City, and it remains a very good tax efficient way to invest as well.
Thanks, Weber. And I guess many people in chat are comparing both FCNR and Mirae product, which I don't, if I could say, is not a right way to look at it, because both have their own space in the portfolio. So one is a equity, one is a fixed product. So one should not compare these two products. If
But I'll say one thing here. I mean, if you see the history is, history is that the best asset classes which return the best of the best returns are the equities and the real estate, right? Typically not the fixed deposits or whatever. This is a great opportunity, but you'll not put all your money into one basket, right? You will maybe take some risk on FCNR and take that bet. But, I mean, the long-term bet in equity will always make money. And maybe Weber put his neck on the table. He said that, on 5-year basis, Indian equities in dollar terms will beat FCNR. Time will tell that, but let's see, generally it happens. Generally, it does happen.
So I must just add one thing to Sheetal that I just did a webinar before this where we were explaining importance of asset allocation. And like you have an FCNR deposit, it gives you stability of the portfolio. In cricket or in any other form of sport like football, you need a good defender and you need a good striker. You can't play a football match with only defenders, or you can't play a football match with only strikers. If you don't get the right balance, the best of the best teams will never win. So in the portfolio, you need a balance of FCNR and power of equities. And I know Indian equities can be that compounding machine because structurally the demographics is strong. Most of the concerns are out. So a good balance will be the great one, but you guys can be the better judge on that one.
Great. I guess we are done with our question and answers. So I would
So I'll
like to
just,
request.
Shobhit, there are a
Yes,
few
yes.
comments here. One or two points I would want to say. I mean, Deepa
Mm-hmm.
has made a comment that they are calling some banks and they're not even getting, many banks have not come up with the products. That's true. Keep an eye on, where this we have covered in our slides as well, that many banks are yet to come with the product. So on FCNR. So we'll keep an eye on it, and we'll probably try to do another one after a couple of weeks, capturing any new products that comes. And another one is is a funny comment related to there might be a tax rates that might be announced after 30th September on FCNR. So let's see if that happens. Okay,
True.
perfect.
So I would like to ask Pankaj ji to share his views on Indian markets now.
थैंक यू सोभित, थैंक यू शीतल जी, थैंक यू वैभव जी। आपने बहुत अच्छा अपना एक्सपीरियंस शेयर किया, नॉलेज शेयर किया। और थैंक यू जिन्होंने भी ज्वाइन किया है दुबई से, यूएस से, अफ्रीका से, इन सभी का बहुत बहुत धन्यवाद कि एक छोटे से समय में हमने इटली अप्रोच किया था सभी को, सभी ने समय निकाला। और मोस्टली चीज़ें शीतल जी ने, वैभव जी ने बताया है, लेकिन मैं अपने एक्सपीरियंस में जो मैंने चीज़ें नोट की है पिछले कुछ सालों, वो शेयर करना चाहता हूँ कि इंडिया में यंग पॉपुलेशन सबसे ज़्यादा, दुनिया भर में अगर देखो तो यंग पॉपुलेशन सबसे ज़्यादा है। और यंग पॉपुलेशन का जो खर्चा करने का तरीका है, जो खर्चे का जो रेशो है उनकी इनकम लेवल पे, वो बहुत ज़्यादा है। दूसरा, इंडिया की जीडीपी की जो ग्रोथ रेट है, दुनिया के डेवलप कंट्री की जो ग्रोथ रेट है उससे कहीं ज़्यादा बड़ी। अगर अपन ग्रोथ रेट को कंपेयर करें तो इंडिया की जीडीपी की ग्रोथ रेट डबल डिजिट में आगे बढ़ी। इसके अलावा भी इंडियन गवर्नमेंट ने 8 पे कमीशन लागू किया है, नए टैक्सेशन लाए हैं इंडिविजुअल के लिए, जिसमें 12 लाख तक के लोगों को टैक्स भी करते हैं। तो इंडिया में लिक्विडिटी बहुत ज़्यादा आने वाली है। तो एक स्टोरी और चलने वाली है ग्रोथ की, जिसको कंजम्पशन स्टोरी यहाँ पे कहते हैं। तो कंजम्पशन स्टोरी में भी बहुत सारे सेक्टर जो इन्वॉल्व होंगे, ऑटो होंगे, बैंकिंग और फाइनेंस होंगे, और डिजिटल इकोनॉमी वगैरह। इसके अलावा जो पिछले कुछ महीनों में वॉलेटिलिटी दिखी है वो मिडिल ईस्ट जियोपॉलिटिकल के कारण, लेकिन ये भी धीरे धीरे शॉर्ट टाइम में कंप्लीट हो जाएगा। और जो इन्वेस्टमेंट के पैरामीटर जो हम देखते हैं उनमें अभी जैसे पिछले कुछ सालों में पीई को लेकर ज्यादा देखा जा रहा है, लेकिन उससे पहले पीवी को ज्यादा देखा जाता था। लेकिन आज की डेट में अगर इन दोनों पैरामीटर पे मार्केट में इन्वेस्टमेंट का एनालिसिस किया जाता है तो मेरा टूल या मेरा रिसर्च ये कह रहा है कि नेक्स्ट 15 to 40 मंथ इंडिया में जो इक्विटी मार्केट जो परफॉर्म कर सकता है वो डबल डिजिट में भी सुपर डिजिट होगा। तो ऐसी संभावनाएं पूरी है। और एज एज ए एनआरआई, एज ए ग्लोबल इन्वेस्टर और एज ए इंडियन, हम इंडियन ग्रोथ स्टोरी में विश्वास कर सकते हैं। और गवर्नमेंट जो अपने बजट में जो कैपेक्स अनाउंस कर रही है वो एक काफी अच्छा है, 1 to 1 वो सेक्टर को कैप्चर करते जा रहे हैं और कैपेक्स को अलोकेट करते जा रहे हैं। तो अभी सिर्फ ये कहना होगा कि इंडिया इज नॉट जस्ट ग्रोइंग, इंडिया इज ट्रांसफॉर्मिंग। तो हम इस ट्रांसफॉर्मिंग में अपना रोल प्ले कर सकते हैं। गिफ्ट सिटी इन्वेस्टमेंट एक यूनिक अपॉर्चुनिटी है, और डॉलर में इन्वेस्टमेंट के साथ में टैक्स एफिशिएंट भी काफी अच्छा इन्वेस्टमेंट। और आप सबके इन्वेस्टमेंट की हेल्प के लिए हम अवेलेबल हैं। आपके पास जिसकी मीडियम से आपके पास में मीटिंग के लिंक आए हैं, अप्रोच हुआ है, आप उसको रिप्लाई करना, हम अवेलेबल रहेंगे। और एक चीज और है, एक्रीडेटेड इन्वेस्टर एक प्रोफाइल है उसके थ्रू भी आप इन्वेस्टमेंट कर सकते हैं। वो सिर्फ FCNR में अलाउ नहीं है, लेकिन गिफ्ट सिटी में अलाउ है। तो वहाँ पे आपका मिनिमम इन्वेस्टमेंट अमाउंट थोड़ा सा और कम हो सकता है। इसके साथ मैं आप सबका धन्यवाद देता हूँ, और सौभिक जी का, वैभव जी का, शीतल जी का, MICS की पूरी टीम का, मेरे एसेट की पूरी टीम का बहुत बहुत धन्यवाद कि आपने समय दिया, अपना एक्सपीरियंस शेयर किया। थैंक यू।
Thank you, Pankaj. I think that brings us to the end. Thank you all for joining today and for staying with us right through this session. I would like to thank Mr. Sheetal, Vaibhav, and Pankaj to share their insights with us. And don't worry if you missed any presentation, the recordings will be shared shortly.